Welcome everyone to Van Institute's free Monday webinar. Today we are joined by special guest Ken Long. Before we start, I'm going to go over a few housekeeping rules. If you have any questions during the webinar, feel free to add them to chat and we will go over those once we get to a Q&A section. If at any point you are asked to raise your hand, hover your mouse at the bottom of your Zoom screen, click on reactions, and there should be an option to raise your hand there. Today we also have closed captioning. In order to turn it on, hover your mouse at the bottom of your Zoom screen, click on closed captioning. Enjoy the webinar, everyone.
Hey, good morning, everybody, or good afternoon. I see my good friend Luke Crockford in Australia, and it's probably late in the evening there. I was telling Jackie that I've been doing so many Zoom meetings these days that I now start every one of them with a yawn, and I can't help it. And I don't know why that happens. I think a yawn is one way that you get that rapid rush of oxygen into your head, and maybe that's what it is. It's a survival mechanism. But I'm really humbled and grateful that you guys would spend some time with me today. So I thought I would try to I'm going to answer some questions that folks sent me about the prep material. I want to cover some lessons learned that we have accumulated from the last 15 months of trading in the year of COVID, plus trying to teach about trading in the year of COVID. And we've developed some lessons learned and insights along the way. Let me see if I can turn up. Maybe it's on my end. Yeah, it looks like my volume is up as high as it'll go. Jackie, is there some feature that you have?
No, but if you are having issues with your audio, I recommend you hitting the little up arrow next to the microphone button and going to audio settings and testing your speakers.
Yeah, that's. I have mine on. It's like on maximum.
Yeah, and I hear you fine, Ken.
Let me try it one more time. It may be on the other end. So we have. I'll try to get a little closer to the mic too. Maybe that'll help. So we've learned some things in the past 15 months about trading and about being traders in a COVID world, and we've learned some things about teaching the skills. And I've also learned a lot about teaching this past year in some of my other activities. I'm a full-time professor of strategy and tactics and change management for the U.S. Army at the Command and General Staff College, and I've been working on a number of research projects with University of Chicago and University of North Carolina and University of Pittsburgh to do education at a distance in the era of COVID. So a lot of the things that I've been doing have been associated with skill development in complex situations that involve decision making, that involve collaboration, and making decisions under risk. So not just trading, but a lot of military type decision making. And there's so much overlap that it just seemed to me that the synergy of those things was really powerful. So I've been making a study of that very phenomenon this past year. And so that has influenced the way I've been teaching trading and doing all my other teaching. And we've got a year's worth of teaching under our belt, and so some of those lessons learned I want to share with you. Hey Pete, I need about an hour.
I'll catch you in a bit.
Yeah. That's one of my projects that just walked through the door. He's the Army proponent for cybersecurity in a global information environment, and working with Peter Singer, Max Brooks, and the National War College on how to do that stuff. So we're working on a project together, which is going to feature distance learning and decision making under risk conditions. So I'm going to make him come back in an hour. So, just a couple things I would say. The first things that I want to talk about are how I'm going to be teaching the rest of this year. So we've started a pilot program in April where I took a look at the 4 courses that I generally teach for the Tharp Institute. The core course, which is long-term investment, making monthly decisions, if you will, for long-term time horizons. Swing trading, where we're looking at positions that we hold overnight, 2 days, 3 days, maybe up to 10 or 15 days, that intermediate time frame. And then day trading, in which we are going to be flat at the end of each day. So we're only looking at the intraday price action. So those were 3 of the standard courses I teach for the Tharp Institute. Well, when COVID hit, we were adopting a strategy that I call hybrid trading, in which we take the systems and strategies and the insights and the analysis that we do for each of those 3 separate time frames, and we look to get some synergy between them. Because what we found out is that, as an example, swing trading, which is right in the middle of that, some of my best day trades turn out to have been swing trades that had come into season and were really starting to express themselves. We were getting a lot of momentum into that portion of the swing trade. And so it seemed very natural to us that if we had a swing trade that's already working and we have a directional bias and the market is rewarding that direction, that maybe there's some intraday price movement that we could leverage and get even more of that swing trade by using a tighter stop intraday. And so for the same dollars at risk, with a smaller stop, you can have a larger position size. And so we began to call that a turbo trade, where the swing trade would be the core position, and then the intraday trade, where we add juice, could be a turbocharged portion of that trade. And then somewhere during that day, we would take off the day trade and then just carry the swing trade risk overnight. And then, as long as that swing trade hadn't hit its exit point, then we had this built-in day trade ready to go. So if we saw one of our standard patterns or strategies intraday, well, then we had already done a lot of the prep and the risk management, because we already had skin in the game and we were very familiar with that trading opportunity. So this idea of core and turbo was a way to synchronize and to leverage the expertise that we had in swing trading separately and day trading separately. And we called that a hybrid approach to swing and day trading. It does a couple things. It allows us to concentrate our attention on the movers. And so now we think of this idea of, for day trading, I want to find the movers. I want to find the swing trade that is also moving today, and then use that as a candidate for day trading. And so the whole concept of hybrid trading was born as a way to use the strength of the individual systems and strategies, whether it's day trading, swing trading, or core trading, and then leveraging that information flow in the space between. So if I'm doing a swing trade as my base and day trading as my turbo, then there is a relationship between those. So a good swing trade setup also leads you towards a good day trade frame. And now you can kill 2 birds with 1 stone. And it also works the other way, that a lot of times a day trade starts off so well and it finishes so strong that if you looked at the daily chart at the end of the day, you would say, oh, that thing is going to trigger a swing trade. So when we know that, we can often start a swing trade by first having a very good day trade that finishes strongly in the direction we want to trade. And then we know that that could very easily attract swing traders. And so we might decide to keep a piece of that very good day trade. And the overnight risk is paid for with the money that we earned intraday with a good day trade. And so we can use the day trade to grow into a swing trade and use the market's money as a way to reduce the risk to our own seed corn or our seed capital or our base capital. So this is applying one of the principles that Van teaches in the money market or in the money management course and book of how to use market's money to increase your return without increasing the risk to your core capital. So one of the things that we learned was that just as swing trades can set up and inform your day trade, a day trade can inform and set up your swing trade, and now you can actually grow a swing trade out of the accumulated pieces that you keep from the day trade. So this is, instead of core and turbo, that's like turbo leads to core, and then you can build long-term positions at a reduced risk to your core capital. So as we thought about that as a form of hybrid trading and developed ways to share the information between systems with a common framework of patterns and systems and risk management and values, we realized that there were some fundamental concepts that applied to both of those categories of trading. For example, the ability to manage my own psychological state when I'm making a decision. We call that getting into the zero state. How to achieve and maintain and sustain a resilient frame of mind. We call that the zero state, in which I don't have a directional bias. I don't have an over anxiety about that particular trade. I realize that each trade that I'm in is simply one trade of the next 1,000 trades that I'm going to take, and all it has to be is just that one trade on its own being managed correctly. I don't have so much risk and anxiety on it that I become fixated on my target. That's very psychologically destructive. That costs a lot of psychological energy. If you make a mistake under those high pressure conditions, it can leave a scar that lasts forever, and that's not good. We don't want that. We want to have an adult relationship, a professional relationship, a risk-managed relationship between ourselves, our money, and the trading enterprise that is going to be around for 10, 20, 30, 50 years. And we want that to be a positive, enduring relationship, just like a businessman would with his own business operations. So, one of the foundational principles that helps me survive and then thrive in day trading and swing trading is to have that kind of relationship, to create a zero state mentality in which I simply am performing the trade according to the rules. I just let the trade be what the trade is. I don't have more than a businessman's interest in the outcome of that trade. Like, it's that one trade is not going to prove me right or wrong or have any ego attachment to it. I'm almost disinterested in the particular results. I want to turn that trade into a science project to see how much money it's going to return as soon as possible, so that I'm not installing my identity into the wins and losses of that one particular trade. So that's a way to have a little psychological strength to deal with what is a very challenging business to be in, which is trading for a living. Well, that's a foundational skill of how to create that psychological zero state. I can actually do things that give me psychological strength to toughen me up so that I can endure the cognitive and emotional cost of trading with real money and skin in the game. I can have a mature adult relationship with that trading enterprise. So that's a foundational skill. How to analyze the market in a steady, consistent, systematic, disciplined way that gives me insights into core trading, swing trading, day trading, and hybrid trading. The strategic and operational framework that allows me to very efficiently and effectively describe opportunities and then frame those opportunities in a standard way so I can quickly estimate reward and risk and decide which of these opportunities have the best potential payoff, so I can now have more opportunities than I can afford to take, and now I can prioritize those according to risk and reward and preferred style based on market assessment. Well, that whole analytical framework, that whole approach to finding opportunities, framing opportunities, trading opportunities, and then learning from those opportunities, that whole ecosystem of learning while doing is itself a foundational skill. So when I was putting together, the courses to teach in the COVID world where we're not going to have people traveling, I said, how can I do that in a sensible way? So we updated the core course, we updated the swing course, we updated the day trading course. But I looked at the common psychological, functional, analytical, planning, operational decision-making skills that are common to all of those and put those into a standalone course called the Foundations course, and price that at a way that makes those things accessible to the entry-level trader, to someone who hasn't already seen like the core and the swing and the day trading, and then reduce the prices on those other courses because I found myself teaching those elements anyway. And so it made sense to make that a standalone entry-level course priced much lower than the other courses, and then reduce the other courses for people that found that these ideas would resonate with them and they wanted to trade more in those styles, that they could take the Foundations plus whichever technical course made more sense for them based on their time frames and objectives and skill levels. And then we created a fifth course called the Hybrid Trading, which then I think of as the more advanced course, which reflects what we've been doing for the past 15 months every night, which is how to find the sweet spot that lives at the intersection between day trading and swing trading, and between swing trading and core trading, and learn how to integrate all of those styles and strategies and systems and support functions and put those into a meta trading system, an entire trading strategy that could handle short-term, mid-term, and long-term trading in an integrated way off of these common foundations. So when we decided to do that, we called that the Hybrid Trading course and the Foundations course. So what we did was started teaching the hybrid course beginning in February of 2020 at the same time COVID came along and started changing our world. And what we've done every night since February 2021 or 2020 is have a nightly strategy podcast in which I go through my daily report, and on the weekends I do the weekend report, and that gives us an integrated strategic and tactical framework to see what's going on in the large market, in segments of the market, for long-term, mid-term, and also tactical time. So what's happening tomorrow, what's happening this week, what's happening this month. So that one set of standard reports, which I teach how to read and use in the Foundations course, I have been doing a nightly strategy podcast every night since the end of February 2020. Oh, and we keep that archived and recorded so that you don't have to listen to it live. You can listen to it whenever it fits your schedule. And we do the same thing every night. I'm kind of boring in that way, that we start with a debrief of that day's trades. And so for tortoise style traders who are in workshops or who are just trading these systems in the usual way, those guys are involved in continuous learning, and they post their setups and they post closed trades. They put those in our chat room. And then what I do every night is I review the trade setups that they post, and I review the closed trades that they executed, and I give them feedback on the trading that they're doing in terms of our 4 favorite things: planning, preparing, executing, and assessing. Because it turns out in our ecosystem, those are the 4 phases that allow you to continuously improve your trading. And so we think of planning, preparing, executing, and assessing. Each one of those is a skill. Each one of those has tools that allows you to do it better. Each one of those is a process that we map out and we study and we get better. And so the way we do this with instructional coaching, for example, is that I'll take an example of Luke Crockford down in Australia and Ken H., who is a full-time professional trader. And those guys are in a small study group. They are accountability partners for each other. They've recently been joined by Garen Liu, a full colonel Navy dentist in Spain, who's a long-term buddy of mine. And those 3 guys get together and they share their setups and they give each other feedback about their setups by posting those charts in the chat room. And then they give each other feedback. And then they wait to see what feedback I give them about the chart setups that they posted. And not only do they listen to the feedback that I give, but they also compare the feedback that I gave to the feedback that they gave. And in that way, they are learning to look through a coach's eyes at their own work and at the work of their accountability partners. And what that really means is that they are developing the full range of analytical skills and feedback skills that will improve their trading practice without me. Because my job is to make them self-sufficient coaches and traders. Because when you can be a trader and adopt a coaching lens and then systematically assess your own performance, you're like a football coach who is training his team and then takes game film and then goes through the game film with his players and coaching staff to figure out, what did we plan to do? What did we actually do? What was stuff that we planned to do that we didn't do that we should have done? What did we do that wasn't planned? And then what did we do that was good, that we want to improve and sustain? And what did we do that was bad that we want to eliminate? And then what didn't we do that we should do? What should we add to our game? So when you are trading, when you are in the execute mode of plan, prepare, execute, and assess, you should be looking at the indicators that you are prepared to operate with and execute your plan correctly. We want you to frame your trade and then trade your frame. But we're going to record that so that we can see the other things that are going on that maybe we didn't notice. Maybe we could learn something by looking at the game film. You don't want to do that in the middle of a trade when you're riding a bucking bronco or you're hunting a tiger. You got a lot to do when you're executing. So we're not going to do a lot of planning. And we're not going to do a lot of what if inside the middle of a trade that we're executing. We're going to execute our trade frame. And then we're going to learn from that and then decide what to add to our preparation and our planning for the next cycle. So in that way, we want to execute when it's time to execute, and we want to plan when it's time to plan, and we want to prepare when it's time to prepare. And then when the smoke clears, We want to assess how we did so that we can get better systematically. Well, that's a foundational skill. Putting together a team of trusted accountability partners that are speaking the same language, that are learning to look at each other's work and their own work through a coach's lens, and to do that in a public way, is the fastest way that I know to develop skill. And this is in accordance with the principles of instructional coaching. Instructional coaching is a discipline in adult education that's been around for about 30 years. And it's what everybody in the professions kind of agrees is the best way to develop skill in many people. And that is, teach your teachers how to teach. Teach your traders how to teach trading to others. Learn to look like a coach at the way you are performing. And that is a learned skill. In fact, if you look at the world of athletics, and even in the world of business, there's a lot of superstars who don't know how to coach. And it's because they haven't gone through the analytical framework of understanding what the components of success are. They may just have a lot of natural skill, or they may have internalized some technique that they're not even aware of, and they can just perform at a high level. But they can't translate that into how to coach others. There's only a few people that know how to do that, that were great players and became great coaches. But it turns out that there's a lot of great coaches who were not necessarily world-class athletes because of genetics or whatever, but who can take a look at the process, figure out what's important, and then learn how to teach that in a special way. And if you take a look at the legacy of the Van Tharp Institute, that's exactly what the Tharp Institute does that makes them different than anybody else out there that I've seen. Because what Van's special skill, his superpower, is to be able to go into an expert's process, pull out and model the things that matter, and then learn how to teach that very efficiently and effectively to the people who are trying to learn. And what I think he really excels at is helping us discover who we are and how we learn and what our beliefs are, and then learn how to teach to those strengths, to those unique qualities that make us individuals. When you put that whole package together, what you have is the ability to take robust systems and strategies and then adapt those to the individual's case, and then surround that with the psychological, emotional, holistic skills that it takes to endure and to make those things personal. So that's another thing that we've learned this year, is that the system that you're given is really only 80% of the thing. The 20% is the extra that you add that makes it your own. So learning how to learn, learning how to adapt it. And as I come to look at it, I now am of the opinion that the system and the strategy as written is really only 20% of it. And that 80% of it is making it your own with the psychology and the techniques that allow you to really own that process. And that's something that we have learned from this year. I've learned that from teaching the military officers, my business clients, traders. So I want to kind of bring this back now to talk about the courses that we're offering and the way we approach education. So I described that the relationship between swing trading and day trading, there is a hybrid form of trading that connects those two. There is also a hybrid form of trading that takes our long-term monthly asset allocation system that we teach in the core course, the blended monthly rebalancing, and then we find ways to use swing trading to either hedge that or to turbocharge that based on swing trade opportunities that come up during the month. Well, that's the same kind of core and turbo relationship between long-term trading and swing trading that we have between swing trading and day trading. So that's hybrid trading also. And when you put all three of those on the table and you look at core, swing, and day, and you combine those into a complete trading plan, that's hybrid trading. And all of those skills of technical analysis, fundamental analysis, psychological state management, learning, adapting, analyzing, psychology, you put all those things together. The foundations course is the entryway to all of those support functions. And I will tell you that the guys who have taken the foundations course by doing the prep work ahead of time and only concentrating on a couple patterns have found that to be a very rewarding 10-week process. So what I found a better way to teach that course is, instead of doing a 2 or 3 day intensive where it's machine gun lecturing at you for 8, 10, 12 hours a day for 3 days in a row and then launch you back home and ask you to digest, it's better to take that same effort and make that a set of 10 weekly courses that have carefully prepared lectures and then a live question and answer session each week that gets recorded and made part of the course, and then connect that with the daily strategy podcast and integrate all of that into an ongoing learning ecosystem that features as much contact time as you need or as you want to build out your learning over a 10-week period. Now, in that foundations course, I teach 2 patterns that are robust. They are simple to see, simple to understand, and they are fractal in nature, by which I mean that same pattern, one of which I call the supported spring crossing, works as a day trade, whether I'm using 250 ticks or 1 minute or 3 minute or 5 minute or 10 minute or 30 minute. When I get into the 30-minute candle, I'm actually doing a little bit of day trading and a little bit of swing trading. A 30-minute candle is a very slow day trade. A 30-minute candle is also a fast swing trade. So if I'm making decisions on a 30-minute candle, am I day trading or am I swing trading? And the answer is yes. I could be doing both. It's a swing trade if I'm going to hold that overnight. It's a day trade if I'm going to exit that position intraday. But the 30-minute, 1 hour, and 2 hour window is a perfect blend that lives in between swing and day. In the same way that 1 day, 3 day, weekly, and 9 day charts are very slow swing trading or very fast core trading. So when you take all of that stuff together and you have a daily rhythm of looking at the comprehensive reports, listening to the opportunities, seeing example trades of day, swing, and core, you're seeing setups, and you're seeing feedback about closed trades every day, and those are recorded so that you can replay them as much as you want. And then you can ask questions which are going to get answered either every night or every week, and those answers are recorded. What you really have is a blend of operational trading in the real world, which is the best simulation of trading that there ever was, by the way, is actual trading. So you have operational development and you have educational development where you're learning the concepts at your speed. That's what the foundations course is like for 10 weeks or 12 weeks, because I usually give you the extra 2 weeks at the end as a special surprise gift. So don't tell anybody. And then I give you a way to continue that course on an ongoing basis until you're ready to specialize in day course, swing course, or the core course. And my intention is to start a new foundations course every quarter. So this one that we have right now is winding up in June. We did April, May, and June. That's 12 weeks. So those guys have a couple more weeks to go. They have about 30 pages of Q&As where they have submitted questions, and I've given them answers in writing, and we've recorded those Q&A sessions and made that part of the next foundations course. So if you were to take the foundations course starting in July, the first week of July, you would have the structured lessons, plus you would have all of the Q&A from last semester's students, plus most of them are staying on. So you have a built-in set of ongoing students that you can partner with, or you can partner with somebody that's taking the course, or you can be a lone ranger and study it yourself because that's the way you'd like to do it. And the course is self-paced, so if you want to do that full time and you don't mind the sound of my voice, I can't recommend that. I hate the sound of my voice, but that's the way we are. But if you wanted to accelerate your learning through that course, you can get it done faster than 10 weeks. Garen Liu, my colonel of the Navy, the dentist, he's trading successfully after 2 weeks of the foundations course using one simple pattern. And you can see his trades in the chat room making bank. And you can look at the trade frames that Ken H posts religiously every weekend. You can take a look from this past week at the trade that Ken made in Tesla that earned 30R, and you can take a look at his markups and his self-coaching and my coaching of him, which shows where that 30R intraday win could have been 60R with a little bit of tweaking here and there. So a 30R day is nice. A 60R trade is better. And then in that same symbol that he earned 30R on Wednesday, he earned 20R on Thursday and 12R on Friday because of the continuation pattern. And so when you have a successful trade, the rest of the world is going to see that. They can see that in the chart, and that's going to draw people to it. And then our frame of reference, the regression line crossover and Bollinger Band system, and the moving average convergence divergence, the MACD histogram, gives us a systematic, disciplined, statistics-informed framework that is adaptive, disciplined, simple to interpret price action on every time frame. It's the same lens that you use whether you're judging an intraday trade, a swing trade, or a long-term core trade. The interpretation of the screen is the same. The patterns are the same. Where you place entries, stops, projected gains, all of those evaluations are identical. So the knowledge and skills that you gain in any one time frame is directly applicable to trading in a shorter time frame. So what it generally comes down to is that we have a standard way to evaluate reward to risk, a standard way to frame the trade. We enter in the same place in the pattern every time. We manage the trade in the same way every time. We exit the trade in the same way every time based on your personalized approach to risk. That's where the psychology comes from, is your own personal risk rewards beliefs and habits and orientation shapes how you make personalized choices in that system. And we coach you through how to do that. So that's what I want to say about all of those courses, that what they really have done this past 15 months is come together in an ecosystem approach to trading that allows you to take standard work, apply it to a dynamic market, and then measure reward to risk in a standard way and then just apply the principles of good management and learning organizations to get better in a supportive community of practice that shares a common orientation, that is all learning to develop a coaching eye so that we can be good accountability partners for each other and benefit from the hard work of others. Like when Ken Hum posts his trade frames, he's done the work that I admit in public. His trade frames are beautiful and tradable once you get the key to look at them. We covered that last night in a 40-minute session. We went over 15 trade frames that are good for this whole week of day trading and swing trading, and the trades are already working this morning off the standard framing. And it bothers me only a little that I'm talking right now instead of trading. But that's the price I'm willing to pay. That's my gift to you. That's a sense of humor that some people find funny. I don't know. But that's what I want to say. I want to just shift gears, if I may, and just talk about what some other folks have said. The first thing is, let me see if you guys can see that. Jackie, in the chat box there, can you guys see that window?
Yes, we see your screen, yes.
Okay, so first things first, Michael asked me these questions, and so I just want to cover them quick to make sure that I follow up. Which workshop covers the core systems? The best thing I think you can do is take the core system with the updates that we did from VTI. I'd been teaching that course for 10 years, and the one that we recorded was by far the best one I ever did, and I wouldn't change a word of how I taught that. And they've updated it with the new insights that we have, that we've learned about the core system since we first started teaching that 20 years ago. It's still good, and so I would recommend that you take that one to get the long-term strategies. Now, I also cover some of those elements of how to use it more broadly in the hybrid course and in the foundations course, and that's a good way to get specific questions answered. So if you took that course and the foundations, that would be the easiest way to get all the answers to your specific questions. The next question was, which classes of assets are used for the core systems and the swing systems? So there's a two-part answer to that one. And the first thing you have to understand is the difference between a system and a strategy in our ecosystem. A system is a precisely coded set of rules that could be traded mechanically by a robot. So 100% mechanical. A strategy is a more relaxed form of that, where there are some discretionary rules that a trader who is skilled could make some adjustments and do their own thing and make some adaptations. So in both the core workshop and in the mechanical swing workshop, both available from the Tharp Institute, I teach systems, and those are tradable without discretion if you so wish. In those two workshops, the core uses exchange traded funds that are broad indexes, companies or country specific indexes. Like in some of the portfolios, you could trade Brazil or China or Australia, or narrower subsectors in the market, like you could add semiconductors or agriculture ETF. You can also trade that with currency ETFs, so that's possible too. But generally speaking, the core is going to be looking at very broad, liquid ETFs that represent broad indexes like the S&P or the Euro-Asia large caps, or collections of companies that are in a sector. The swing systems do the same thing, only you can also apply those to individual companies that are either small, medium, or large. You can look at currency pairs. You can look at ETFs. So all of the equity array of assets are available under the swing mechanical system. Now, in the mechanical systems that are available through the THARP Institute, I am teaching systems strictly. So in the swing system home study course from the THARP Institute, you're going to get 7 different mechanical systems that trade different aspects of the market opportunities on a swing trade time frame. You also learn a strategy called the continuation pattern, which says if I had a successful swing system and I had a trade like a 5-day down pattern and it closed a successful trade and then I got a re-entry signal, I call that a continuation pattern. It is because you had a successful trade already, you have a relaxed system to get back in. So the fact that you had a successful swing makes the next trade a little easier to believe in. So we call that a continuation pattern. That is a standard module that you can turn on or off for any of the 6 mechanical systems. So we have the 5-day down pattern, channeling, overreaction, washout pattern, 551W, and my form of the triple screen system as initially designed by the genius Alexander Elder. So I have a special way I implement that. So that's 6 standalone systems that work on currencies, commodities, ETFs, individual companies, plus a 7th system called the continuation system, which you could use in conjunction with any of those. Now, I also teach how to use those as strategies in my own home study course, which builds on those previous 2 courses. And in that one, I teach you how to use optional rules, how to use some of the advanced strategies like the MACD 4 seasons, the second generation RLCO patterns like the owl, the supported spring crossing, the collapsing dragon, the Z3 pinch breakout. These are all fractal patterns that we teach in the hybrid course and in advanced forms of these courses that can go beyond just the pure mechanical systems. But in every case, we're finding these things work in currencies, commodities, ETFs, and individual companies. And they work in the futures market for leverage traders because the futures that we would point you towards are the ones for which there's already an ETF. Like the S&P futures trades identically to the SPY ETF, only you're just trading it with leverage and round the clock. So the things that you learn how to trade in ETFs, in many cases, can be traded with futures in the same way. Now, one of the THARP Institute super traders, Danny Ben Yair, has put together a TC2000 trading bundle that takes all of my systems and strategies and indicators that we use to generate the daily report, and he's got that all in TC2000, so you can run these automated reports and filters on 5,000 different symbols if you want with the TC2000 data feed, and you have independence from my reports. And we sell that as an administrative assistant package to you. He's also generated an 11-lesson options course where he has taken the best of my day trading, swing trading, and core trading and added his 25 years of expertise as an options trader and specialized options patterns that align with Tortoise systems. And we sell that for a ridiculously low price. I'm trying to convince him to sell it for more, but he's resisting. So we have a Forex course that uses our foundations and indicators to apply to currency pairs, and those guys have an existing years worth of trade results of these ideas traded forward, and a working community of practice that you'd be invited to join that continues to apply the Forex lessons for people that want to trade like on a 4-hour chart instead of the minute chart. And they have some just ridiculous numbers. This is what their 2020 results look like, traded forward with real money. The system quality number is 9.72, but I want to caution you on that and say the reason it's that high is because of the large number of trades that were taken. So when you're computing the system quality number, the SQN starts to go up when your trade the numbers of trades in the deck are large. So if you normalize that for just a standard 100 trade lot, then the system quality number is in excess of 3. But the number I really want you to look at is this, that let me make this a little bit larger. This is the number that you should pay attention to. The winning trades were 686. The losing trades were 693. So that's basically a coin flip. The winning trades on a standard lot averaged $600 of win, and the losing trades lost $260. So that's a 2.5 to 1 ratio. So let me just ask you this question. If somebody offered you this opportunity to flip a coin, and it heads, you win $600, and tails, you lose $263, how many times a day do you want to trade that system on currencies which trade basically 24 hours a day? How many times a day do you want to trade that? And the answer is as many times as I can. And so you can actually trade that a lot, and the equity curve look like that on a $50,000 portfolio, and at the end of the year is north of 200. I'll let you do the math. And when you look at the trade sequence, one of the things that we do is we treat this as a manufacturing process. And what we look for is no losses greater than 1R, and except for two trades out of 1,300 exceeded a 1R loss. And the bulk of them are between -1 and +2. That's good. And then some of them turned out to be really large, but at no time did the trade risk ever exceed the initial risk. So that's what I want. I want a standard normal looking histogram that leans towards the right, that has a very strict fat tail to the left. Like, I don't take losses greater than 1R, and I take a lot of routine wins and losses that are positive expectancy, and then occasionally a good thing happens to a bad person like me, and I get results that are better than 2R. That's what this histogram looks like. And you get a very stable standard result over time. So that's what I look for in a system. That's the kind of system that you could expect to produce reliable results, and you could determine if it was producing abnormal results pretty quickly. And this equity curve is not using leverage or markets money. This is using a standard lot and a standard risk per trade all the way through. This isn't even using any of the advanced money management strategies that Dr. Tharp teaches in the money management reports. So if you're a Forex guy, you might be interested in that. If you're not a Forex person, you might be interested in Forex. And the gateway to all of this, whether it's the options or the Forex or the core, swing, day, or hybrid, is the Foundations course, which is going to start in the first week of July. Now, this is like a testimonial from one of the guys that just took the course and has already signed up to continue to stay on. And he just said, hey, I want to thank you for teaching, and I benefited a lot in the last 2 months. and this is an engineer who has made some fundamental changes in how he approaches trading. And I approach it as a statistical probability, and that seems to resonate with his engineering background. And what's important is that we are not trying to hit the big one. Once in a while we hit a big one, but that's not what the system relies on. The psychological work we did in the Foundations course to elicit deep-seated values was important. The idea of how to frame trades and manage risk was key. The use of regression lines as a way to adapt to changing markets was key. Learning how to measure risk in a standard way. Understanding how those 4 patterns, the supported spring crossing, the Kata 2, the Z3 pinch, and the owl pattern, which are taught in the Foundations course so that you have a system and a pattern that you can learn from, and which is fractal in all of the time frames, that was key. And then how to manage stops is key. There's a lot of keys on this ring. And then re-entry. So he now, after decades of trading, he says, hey, I now see a systematic approach to trading that I feel is a good fit for me. And he's committed on a whole new level. That's the kind of person that is going to be in the room with you, continuing to learn as part of the continued Foundations course. So I want to say that. I didn't mean to go this long. I noticed that I've consumed all the oxygen in the room. And so what I would like to do is shut up a little bit more and listen to your questions for as long as you would like to ask them. I do want to say thank you for your kind attention. I want to, let's see if I could figure out how to stop sharing the screen. Did we lose our screen here?
No, I still see it. There should be a bar at the top of your screen.
Yeah. Oh, yeah, there it is. Stop share.
Okay. Yeah.
Yep, got it.
If you have any questions, feel free to add them to chat or raise your hand by hovering your mouse at the bottom of your Zoom screen, clicking on reactions, and then raising your hand. There are no questions that came in while you were talking.
I successfully put him to sleep, I think.
Bradley has
that effect on people.
Bradley has his hand raised.
Hi, Ken.
Yeah, go ahead and.
Do you hear me? It's Bradley from Montreal, Canada.
Yes, sir.
Hi, Ken. Nice to meet you. It's my first time hearing you live and in person. I've read about you through Van, so it's a pleasure. I have a quick question, and it's again, I'm new to trading. Basically, I'm more of a long-term investor. So just to give you my background. My question is, in terms of a trading system, if I were to just classify 2 opposite styles of systems as an example, if you were to sort of have one system where you sort of place your stop and your target, I would call it maybe a little bit inside the noise of the market, and you're sort of reaching a binary, your trades are sort of, maybe it's sort of like the frog system in Van's position sizing book, where you're sort of either hitting your loss or hitting your target. And of course, it's skewed to risk reward being a little bit in your favor, and you're getting more wins than losses. I believe that's the case. Or conversely, a system where you sort of move the goalposts a little bit wider, and your trades are sort of generally falling within the goalposts. You're not really hitting any 2Rs or anything, but you're sort of in the game. What system do you lean more towards as being a better way to go?
Well, what I've learned is that I love the first system that you described as like a phase 1 kind of a trade. I'm going to make a lot of contact. I'm going to get a lot of standard results. That the results of that system create positive expectancy. And if I have a lot of signals in many market types over many instruments, I now think that what I have is a robust system that forms a very solid base. So I love that. Now, if I can evaluate the trade as it is coming into the station and achieving a standard result, and I've got that money in hand, I'm open to the possibility that this might be a gateway to another leg up. So for instance, when you look at multiple time frames, Imagine there was a harsh sell-off on a short-term time frame that created a buying opportunity on sale. And then because of a robust pattern, I could be a second mouse, and then I could get the return to fair value and I'm locked in. And maybe that's it. Maybe other people on higher time frames see this as an opportunity to buy on dips, and they're in it for the long term, and they start a buying program that takes this beyond just the simple return to fair value, but it gives them incentive to go beyond. That kind of trade could grow into a multi-leg big win. I would like to be able to make a judgment that says, can I adjust my stop in such a way that I'm open to that follow-on trade instead of just automatically hitting my profit target and getting out? Now, if I can do that, I can now study that as trade 1 and trade 2, and I can independently evaluate the return on equity of both of those trades. Trade 2 might be so good that I should put all my money in trade 2 and just paper trade trade 1 and use that as a setup. You follow me on that?
Sure.
Or it may be that the thing to do is, since I don't have any better ideas, I should just take every trade 1 that I can, and then for a selected subset where it is a low risk way to transition to a larger time frame, just let it grow in that way. Well, I described one way to do that by growing a day trade into a swing trade or a swing trade into a position trade. So what I've learned is that there is a standard way to evaluate reward and risk in our framework so that at every point on the curve, I can make an updated judgment about reward to risk to determine if this is a trade that I should stay in, and that as long as I'm in it and it keeps going and I can manage that risk, so be it. That actually simplifies my analysis about how to be prepared. Now, if I'm going to trade overnight, the overnight risk is different than the intraday risk, okay? So the intraday risk on a liquid instrument can be measured in pennies, the bid-ask spread, and I can get out of a trade. But the overnight risk in equities, there's 16 hours of news that can generate a 10 or 20% gap adverse that I have to contend with. So if I'm going to express trade 2 as an overnight risk, then my position size must change to account for the different profile of risk in the two different time frames. But on the intraday, I could grow a 1-minute trade into a 5-minute trade, into a 30-minute trade, and just comfortably stay with it. And then before it's overnight, just reduce to my swing trade size risk. So there's a couple different ways. What I would say is it starts with a low risk idea that I can quickly go from open risk to a position I call no lose plus dinner for 2. So let me put it this way. If I risk $400 on an intraday trade, maybe I have 500 shares and maybe I have 400 shares with $1 per share risk. Maybe that thing starts moving in my direction and I can adjust my stop from the initial risk to the point where if my risk gets hit, I gain $100. I'd like to gain $400. I'd like to gain $1,000. But if I can move my risk from minus 400 to plus 100, I do that. And now my psychological profile changes completely, because the worst thing that happens to me now is I make $100 and I can take my wife to dinner. So I call that psychological state no lose plus dinner for 2. So if I can use that exit strategy or that trade management strategy on what you described as pattern 1, and I can move that to no lose plus dinner for 2, I now have a little bit of psychological room to be able to study, is this the kind of trade that could become a trade 2, where I can let it go a little bit longer because I have evidence that it's working and it hasn't hit my stop? Now, you can do that with a trading robot that has a coded risk adjustment or a stop management, and you can do that automatically. Or you can use trader discretion if you want. So I like to start with what you described as pattern 1 kind of a low risk, get my risk out and have a chance to make some money with lots of opportunities in both directions, in many market conditions, on any time frame. That's what I love. If I can do that, I can now start bringing some trade framing and exit management to do more with that raw material. So that's my short answer. Does that sound fair?
Thanks so much, Ken. That was great.
That's a foundations course lesson, by the way. So Jackie, send me this video so I can capture that answer, because it sounded good in my ears.
Yeah, of course. And there were no other questions in chat. Somebody did add very clear explanations, so you didn't lull everybody to sleep. You just
Or they're just being
good.
polite. Well, no, this is the Tharp Institute people are so polite that they would never kick it. They'd never kick a man when he's down. And by the way, that's one of the reasons you want to take courses through the Tharp Institute, is because the instructors are the other guys are really good. I'm good enough. But the students that you get to work with are just amazing. I see Jim Carroll snuck in here. And, there's some really good, Daryl Miller's in here, I see. So there's the quality of people that you work with in the classroom are just amazing. And that's one of the real beauties of the Tharp Institute, is that trading doesn't have to be a solitary endeavor. There's other people around you to help share the pain and to share the joy. And that's part of one of the sources of power that you get for building emotional resilience, is having that human connection. I see Jim Carroll's smiling face with the samurai in the background. He and I are sword brothers of the spirit. Jim believes in Jim is a runner, and he believes in running. I'm too old and fat to run, so I'm a judo martial arts player, because I can't outrun you, so I got to be able to grapple.
Sadly, I had
So
to give it up. It's all on the bike now.
Yeah, I'm with you, brother. So any other questions or comments? I'm happy to stick around, because otherwise I have to go to a meeting in the college, and I really don't want to go to that. So this is better than anything else I'm going to do.
Somebody asked, how do you select the markets to trade, as sometimes there is just no trend? Any ideas?
Well, we start with a wide array of choices. Broad market indexes like large caps, mid caps, and small caps. And there may be an advantage in one of those. There may be an advantage in style. Like right now, growth is beginning to overcome blended and value. And the U.S. has been outperforming the Euros. So much that it might actually be time to shift. And right now, the techs have been underperforming finance, energy, and materials, but are starting to wake up, while finance has pulled back just a little bit. So one of the things that you can look for are these moments of relative imbalance between sectors and styles and geography. And there are some places where individual currencies are doing well. The cryptos are there are so many opportunities in crypto, it's ridiculous. There are individual companies like Cliffs Natural Resources, a little steel company that trades like it's a internet giant. So when we do our analytical process, we're looking for what we call a critical state, which is a moment in time when that symbol, out of the many hundreds we study every night, symbols that have an opportunity to make a large move in either direction in a short period of time compared to all the other things. And if I can do a low risk entry that quickly gets to no lose plus dinner for two, I can get my risk out and go along for the ride, and then it's a science project. And I can see, is this just going to be a day trade? Okay. Oh, could this grow into a swing trade? Okay. Could that swing trade become a core position if it stays long enough? Okay. And I'll tell you, that's what happened with the clean energy ETF last year. The market collapsed after COVID. PBW, the ETF, dropped to 25. We found a low risk entry at 28 with a $3 risk. And over the next 12 months, that thing only went to 140. And we got 6 different layered positions into it with a managed risk all along the way. We didn't have an opinion why. It just was doing that and refused to lose. And then when the signal to get out at 120 hit, we just followed our discipline and exited. And that thing went from 140, we got out at 120, and it dropped to 75. Well, it's now moving its way back up to 90. So when you look at the market in a comprehensive way, through many different lenses, and you don't have a preconceived bias about which one's always going to be right, you just look for, like a coyote would do, you look for easy opportunities where you can minimize your risk, maximize your gain in short periods of time, and then let the opportunistic trade become the managed trade, become the decisive trade, and be surprised into those big wins. So we have never run out of opportunities to trade. We've always run out of capital to put on those trades, and that's a really good problem to have. Really good problem to have. And we're working on that. But that's what I want to have, 5 opportunities for every poker chip I want to put on there. Then I don't have to take shortcuts. Because if I have more good framed trades than money, I don't have to take shortcuts. I'm not tempted to cut corners. I can just take prudent risks in a standard way and just drive on with that. So when you add in currencies, commodities, all the different ETFs, different styles, we don't run out of opportunities to trade. So that's how I would answer that one. Over.
And that was the last question in chat, and I don't see any hands raised. So do you have any closing remarks?
Keep your risk measured and your powder dry. And I'm looking at Jim Carroll. I'll just say, hey, Jim, I only have 2 things that I want from you. Be a good person and do what you love. And we can figure everything else out. So let's try to do that, okay? Sound fair?
Roger
Thanks,
that.
Jackie. Thanks,
Well, thank
Jackie.
you all. Of course, thank you all for attending Van Tharp Institute's Free Monday webinar. Have a good rest of your day, everybody.